Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 12, 2022. Hope you're all doing well. In today's segment, we'll rank the cruise liners, Norwegian, Carnival Cruise Lines, and Royal Caribbean and see what stock we can buy at this time. So with that, let's jump in. So we'll start with the Carnival Cruise Line and compare it to Norwegian and Royal Caribbean. And finally, let's come up with a conclusion. What stock is better? So with that, let's jump in here. All right, from a Glassdoor review perspective, we got Carnival Cruise Lines. The CEO, Arnold W. Donald, has got a nice 94% approval rating. That's a great approval rating for this CEO here. And next we got here Royal Caribbean, and we got CEO Jason Liberty. He's got a nice 81% approval rating. It's also great approval rating. In the middle, we got Norwegian. We got Harry Sommer with a 67% approval rating. I know we got Frank also is a CEO here, but this CEO gets a 67% approval rating. It gives you an idea about what employees are thinking about their CEOs. I think it's great to see 94% for Carnival, and we got a nice 81% for Royal. I think those are good ratings. I think ratings for Norwegian probably should improve from this point onwards. All right, now let's jump in here and look at a quick ranking and comparison from a fundamental perspective. Look, we got here the current stock price perspective. The cheapest price is Carnival, $11. From a market cap perspective, the highest market cap is Carnival, and then we got Royal Caribbean, and then we got Norwegian. So look, $12 billion market cap for Carnival, and $11 billion for Royal, and $5 billion for Norwegian. From an analyst perspective, both Norwegian as well as Royal Caribbean have got buy rating from analysts, which is good. From a target price perspective, all these stocks have got nice and high target price. Right now, they're all crushed right now because of all this coronavirus, and folks are a little bit skeptic to take all the cruise lines at this time here. Look, all these stocks are down big time from 52-week high. We got here, we got all this Norwegian down 60%, Carnival down 64%, and Royal down 53%. Looks like Royal is holding up pretty nicely, and then comes Norwegian, and then Carnival. From a revenue perspective, clearly Carnival is doing very well. Nice $3 billion revenue, and then Royal, and then comes Norwegian Cruise Lines. Revenue growth perspective, though, looks like year-over-year revenue growth perspective, Norwegian is high here. Probably it's got a lower basis points. And then we got here gross margin. From a gross margin perspective, look, Norwegian has got big negative gross margin, negative 84%. And then we got here Royal has got negative 37%, and then we got CCL negative 9%. And then as you scan through here, we got free cash flow here. All these folks are losing money big time, as you can see here. Norwegian losing at the tune of $2.7 billion per trailing 12 months. And then you got Carnival losing big money, as you can see here. And then finally we got Royal, which is losing $4 billion. And then you got cost of debt. So look, all these folks take a lot of debt, and cost of debt is the interest rate that you pay. Looks like Norwegian is paying the highest interest rate here, 11% on their debt load here. And then we got lowest interest rate by Carnival Cruise Lines, and then you got Royal, which is 5%. Look, the Norwegian is paying almost double the interest rate payment compared to Carnival and Royal Caribbean. From a debt to equity perspective, look, Norwegian has got a lot of debt load on their balance sheet, the highest here, and the lowest is Carnival Cruise Lines, as you can see here. From a valuation perspective, look, all these are not, these stocks have got low valuation, as you can see here. Among them, looks like we got Norwegian, the highest valuation among these names here. And then you got earnings per share. All of these companies are losing money, as you can see here. And lowest earnings per share money loser is Carnival Cruise Lines. And one more very important aspect is next year growth year, both EPS and revenue growth year. Look, we got Norwegian doing great when it comes to next year revenue growth as well as the sales growth here. And then you got Royal Caribbean doing great, as you can see here. And then you got in the middle, which is Carnival. And then you got relative strength perspective. Royal Caribbean is completely sold off with the lowest relative strength index. And then Carnival, and then Norwegian. And from a return perspective, look, all these stocks are not made money for you. If you are holding them for 1 year or 5 year, losing money big time. Highest money loser is Carnival with the 81% in last 5 years. And financial perspective, these companies are not doing great. Look, all very low Altman Z score. Lowest score goes to Norwegian because of their high debt load and high interest rate. Carnival is a little more in a better shape, but it's not good score. I like the Altman Z score 1.8 or higher. Pietrowski F score perspective, all below average, as you can see here. I like the scores which are above 5 or above 6 for that matter. And look, from a financial perspective, Royal seems to be doing a little bit better than other two. And from a growth and profitability, these have got F rating from Morningstar, not doing great. From an overall score perspective, we got 15 overall score for Carnival, 9, which is the second highest for Norwegian, and 5 for Royal. Overall score rating perspective, the higher the better. Looks like highest score goes to Carnival, and then Norwegian, and then Royal Caribbean. This gives an idea about fundamental analysis. Now let's look at a few technical analysis and see what's the result from a technical analysis. All right, from a technical analysis perspective, look, we got exponential moving average. We got Norwegian Cruise Line. Stock price is at $13. And we got 5-day SMAs, EMA, 5-day exponential moving average, which is $14.36. The price is 8% below. The current price is 8% below 5-day exponential moving average. 12% below its 10-day exponential moving average, and 15, and so on and so forth. As you can see here, the current price is 37% below the 200-day exponential moving average. And then you got Carnival here. Carnival is, it's a little more down, as you see here, 10% below its 5-day moving average and 42% below its 200-day exponential moving average. And then you got Royal here, 10% below 5-day EMA and 39% below its 200-day EMA. Look, all these stocks are trending down, as you can see here. From a moving average perspective, all are in red, as we see here. And now let's look at a few more technicals here. From a technical perspective, both Norwegian Cruise Lines as well as Royal, they got some insiders. As you can see here, there's an insider transaction that tells you insiders are buying Norwegian Cruise Lines, and looks like institutions are buying Royal Caribbean. So that gives you an idea, what's happening, from a insider and institution perspective. On the other hand, Carnival looks like institutions are selling slightly. And then got volatility. When it comes to volatility or IV percentile, look, Carnival has got highest IV percentile, 100, and then comes Royal, and then comes we got Norwegian here. From a short ratio perspective, look, we got a nice and high short ratio here for Carnival, 13, as you can see here, and then comes Norwegian, which is 10%, whereas Royal is 6%. You can expect some short squeeze for Carnival, which is the highest short ratio here, and then Norwegian. And then you got your price to call ratio. Looks like Royal Caribbean folks are buying call option. That's why put call ratio is high here. That tells you more call volume than put volume. Whereas so on put call ratio is high. So let me take that back here. Put call ratio is high for Royal Caribbean. That tells you more folks are buying put option, hedging their bet. They're thinking Royal Caribbean stock can come down. That's why they're buying more put option. Whereas Norwegian and Carnival looks like there are more call buyers than put buyers. That's why put call ratio is less than 1, as you can see here. And then we got here from a float perspective, we got a lowest float in Norwegian, looks like, or actually lowest float in Royal Caribbean, 220. That's good here. Next we got Norwegian, and we got highest shares available for Carnival, as you can see here. This will put some pressure on the near term stock price. The moment you have more float, that tells you got more supply, and it takes some more effort to raise the stock price higher. So that's why you could see this one right here. Royal can go higher because it's got low float, but on the other hand, it's a high short ratio for Carnival. It tells you that it can really squeeze those short sellers if it goes higher. Then as we scan through here, we got DMI. For the technical folks, if the DMI positive is greater than DMI negative, there's a positive indication here. But all these stocks, as you can see here, DMI positive is less than DMI negative. That tells you these are all trending down as of now. That's why it's a little bit negative. From an earning perspective, looks like we got Carnival Cruise Lines coming up with the earnings in June, but other two are done with their earnings. And look from a Bollinger Band perspective, these are just above their 50-day Bollinger Band, the lower Bollinger Band. Looks like we got lowest performance in Royal Caribbean, and Norwegian is trending higher. It's 6% higher than the lower Bollinger Band here. And from a Bollinger Band 20 perspective, also look, Norwegian is taking some action here. It's going higher off late here. That's why it's negative 8%, whereas other two are below their Bollinger lower band here significantly. That tells you in the nearer term, Norwegian Cruise Line is taking some traction compared to Carnival and Royal. And now from a recommendation perspective, analysts are recommending buy for both Norwegian and Royal. Whereas from a technical rating perspective, all of these stocks are strong sell. Now you got to look at the volume. As you know, highest volume is always good, especially when the stock is going higher. But now stocks are going lower, as you can see here. From a volume perspective, Carnival Cruise Line gets the highest volume, 67 million shares traded. And then we got next one is Norwegian Cruise Line, nice and high, 31% volume here. And then finally we got Royal with the 9 million shares traded. As you see here, if you compare it to volume 10-day, 30-day, 60-day, and so on and so forth, looks like we got Carnival with the nice and high volume across the board, as you can see here. And then we got Norwegian, nice and high. And then the lowest volume is in Royal. Probably it's not trading as much. And then let's look at the yearly return. Look back in 2008, it was a brutal year with all the financial meltdown. At the time, we got Royal Caribbean down 67% and Carnival Cruise Line down 45%. And then we got here 2011. Also, look, there is a big drop here. Same story. Carnival Cruise Line is down. Carnival Cruise Line is down 29%, whereas Royal Caribbean down much higher. And then we got here 2016. At this time, we got Norwegian Cruise Line also in the mix here. But look, Carnival seems to be doing pretty well back in 2016. And Norwegian lost a lot of money for investors. And Royal Caribbean fared a little better compared to Norwegian. And then we got 2018. This is when our friend Powell, Fed chairman, he increased the rates significantly. Look, at the time we got Norwegian did pretty okay compared to other two here, and the highest loser is Carnival, as you see here. And then finally we got 2020, COVID hit, And look, we got the worst performer when the COVID hit was again Carnival here, and Royal did pretty okay, and Norwegian did not do well. So that gives you some idea what's going on off late. But look, in 2021 so far, looks like Royal Caribbean in 2021 they managed to go higher slightly, 2.96% higher. If you look at year to date, looks like we got here Carnival done big time year to date, and next is Royal, and then we got NCLH Norwegian. It's performing a little bit better in the year to date time frame. This will give an idea about the monthly return, and you can see how these stocks are doing. So on a yearly return, I mean, you'll get an idea how these stocks have done historically. So now what we'll do is we'll turn our attention into the trending itself. I love to look at the trend and see what's going on. But look, there is no silver lining here. From an earnings per share perspective, we got here all these. First one, we got Carnival Cruise Lines, as you see here. It's getting better from 2020 to 2021, but still negative earnings for Carnival. And sales, look, 2020 2021 sales is trending down, which is not a good sign. And this company is also issuing the stock and diluting the share count. That's why number of share count went higher. Not a pretty scene here. Then we got Norwegian. Same story. Earnings per share is slightly improving. Look, we got little more improvement in Carnival, but here a slight improvement in Norwegian. And look, sales or the revenue is coming down big time, and shares outstanding, these guys are diluting the share count, as you can see here. Then you got Royal here. It's trending up, as you can see here. Still negative earnings. And we got here sales coming down big time. Top line revenue down. And shares outstanding slightly increasing. From a shares outstanding perspective, looks like Norwegian is increasing the shares outstanding with a big amount here. And next comes Carnival. All right, now let's jump in here and look at quick conclusion. From a conclusion perspective, I would say number one rating goes to Royal Caribbean. Look, they've done about 124% for the investors in last 10 years. In last 5 years, they lost 57%, and they lost about 51% in 1 year for the investors. The total debt for Royal Caribbean is $23 billion, and they're paying about 5.660% interest rate on the debt load here. From a next year earnings per share perspective, nice 185% EPS growth, 43% revenue growth. That makes them number one among these cruise liners here. Number two is Carnival Cruise Lines. These guys lost money for investors in 1 year, 5 year, as well as 10 years, as you can see here. And look, from a cost of debt perspective, these folks are not paying too much debt on their they're not paying too much interest rate on their $36 billion debt. The highest debt in this category is by Carnival Cruise Line, which is $36 billion, and interest rate is not much. They managed to get a low interest rate. And revenue EPS growth is 179%, and next year revenue growth is about 53%, slightly higher revenue growth compared to Royal Caribbean. And finally, we got Norwegian Cruise Lines. Performance perspective, these guys have got 75% in 5 years, as you can see here, 60% in 1 year. And look, from a debt perspective, $13 billion debt, and these guys are paying highest interest rate, 11.60%. That must be hurting. And from a next year EPS growth perspective, nice 205% EPS growth and 50% revenue growth here. I think they got to be careful. I think they should reduce their debt load here. This is too high debt load for me. But revenue growth is 50%, which is a little bit low compared to Carnival. So with that, I'd recommend maybe Royal Caribbean rank 1, Carnival rank 2, and Norwegian Cruise Lines as rank 3. And few of you have been asking, hey, can these companies survive. I think probably they can survive. They're taking some debt to survive at this time as this COVID-19 stabilizes and more and more folks are comfortable to go out. I can see a case for these companies to bounce back. These companies have been there for a long time. These companies have seen, especially the Royal and Carnival, they have seen ups and downs in the market for a long time. These companies can survive. So with that, thank you very much. Happy investing and trading. Please subscribe.